Good morning, traders. It's 9:01 Eastern on Monday, the 2nd of October, 2017. Thanks for joining me again on a Trader Bite, early nourishment for your trading mind. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The markets this morning opening just slightly stronger. Again, the DAX is leading the index world, index futures world that I follow. DAX is up 0.36% or 46 points. The US dollar is also strong today, up almost 0.5% at 0.45 on the US dollar index futures, the December contract on ICE. The laggard today is RBOB, gasoline, and gold. They're at the bottom of the pack. The NASDAQ, S&P, and so on are teetering around unchanged, just slightly above where they closed on Friday. Strong close on Friday is expected. Good volume going into the end of month, end of week, end of quarter. It was a bit of a kind of a more quiet trade than I expected on the close. As far as what's leading us in this week, I'm not going to go over the calendar events. There are many, many, many calendars online. But there's, just as a general comment, there's a lot going on this week. We have a slew of numbers today. One of the key things to watch or to keep an ear out for is Japanese inflation is finally, after 30 years, is finally rising, which is Japanese inflation rose 0.7% year on year. This is the fastest since March of 2015. High energy prices are lifting the market there, and what that does is it gives opportunity for the Bank of Japan to put some risk capital, some risk premium into the value of the currency, meaning it starts to raise rates, which would be great for trading for us if central banks start to do that. Other than that, check your various websites for the calendar events and so on. We do have non-farm payrolls this Friday. We have quite a few central bank speakers throughout this week. Every day this week has a few things on it in Europe or in the U.S. So keep an eye out on your calendar. It's going to be busy this week. Today, the key figures we're looking for are U.S. manufacturing PMI at 9:45. Then 10 o'clock, we're looking for construction spending and ISM manufacturing. We also have Fed Speaker Kaplan today. Those are the key items to look for. Other than that, let's take a look at what we expected on Friday for Friday's trading. Friday, we were opening in the upper end of the profile from Thursday. Thursday's profile was an inside day after a big swing day on Wednesday. The expectation on Thursday is for the market to balance out early on, and then to get a large impulse moves up, and then to consolidate into the close before the end of month. The end of month and end of quarter trade takes us up or down into the close. Hard to predict which way that's going to go. The window dressing that occurs at the end of every quarter, it could go either way. But we were mainly looking for the energy to be to the upside. That's exactly what happened. We had basically a market that took off and went sideways in a flag later in the afternoon. On the second hypothesis, if it does stay sideways most of the day, Friday was the day before Yom Kippur, which is a big Jewish holiday. Generally, that causes the market to be slow. And if that's what takes over, then the expectation was for the market to go sideways inside of Thursday's range, and then for it to take off later in the session, as indicated by this arrow here, once we get close to the end of month or the end of the session trading. Here's what actually happened. Very short consolidation, very short consolidation on the open, and then we start to get the move up, the impulse up, pull back, couldn't even get to mid, and then we finish on highs. The point of control is near the high. If you recall, if those of you who have flex levels, here are the flex levels right here. They're kind of squished over everything. If you have flex levels, you'll see that I had a measured move high, a key measured move high of 25.18 and a quarter, which was the key target to the upside on a break higher. We were free and clear up to 25.18, and then on Friday we stopped just a couple ticks ahead of that. We're trading 25.18 currently, 18 quarter currently, but we're basically at that measured move here. We're likely to stall a little bit. There's a secondary measured move just above at 22 and a quarter. And so what we did on Friday, with the point of control being at the upper end of the range, finishing right at the upper end of the range, we expect the market to drift higher in the next session. It did. Yesterday we pushed to 23.50 and are currently trading near the low in the overnight session. So this basically looks just like what we expected for Hypo 1, and why not? The market's basically expected to move away from this large balance area. Big volume occurred in this zone. It's not as Gaussian or as balanced as we'd like to see, but we've consolidated quite a bit here, and we have drifted up upwards for the entire week last week, with one-time framing up on the daily. We did have one-time framing up break on the weekly, but we've taken it all back, as we often have. Now let's move to the overnight. Let's jump right to the overnight chart. Thanks to Hampton for the little shortcut to find my charts when I need them. And here we are. The overnight immediately continues as if the auction never stopped on Friday afternoon. Immediately continues higher, goes to 23.50, and then we get this absolutely dead overnight session with a horrible looking low. There is no auction on this low, other than to say that a lot traded there. So this is a very weak low overnight. The volume is in line with what we would consider to be normal, close. The volume is right there with the most common volume for the overnight session at 145,000. And so the activity here is quite normal in its participation, but we still fall below the mid of the overnight session. Try to get above it right here, and we continue to have pressure to the downside. What we have is an inverted saucer formation or cup and handle formation with a pivot at the low. The expectation is that we're likely to drift lower to auction down to find those buyers if they're still there. So that's what I'm looking for this morning. So the overnight session is giving us that. The overnight inventory is 100% long at this point, with the delta confirming that the inventory is mostly long in the overnight session. The second thing I wanted to go over, of course, as you have probably seen consistently, is nope, this is not what I wanted. I wanted the weekly. There we go. Nope. Sorry, I keep clicking on the wrong thing. So here's what we did for the week. Monday, gold. Tuesday, purple. Wednesday, red. Green. Thursday, blue. Friday, just a very pretty channel up, and just one time framing up. This is following the break of the weekly one time framing up. You could see that we ended up testing lower, but then finishing higher. This is further strength, and this is a further squeeze of the short. So those people who think the market are overvalued and keep shorting it, this is a nightmare scenario here. And so This is what we're seeing. We continue to see the same thing over and over. So the expectation is this week will likely have a higher low again, even if it travels down. 24, 87, 86 area is going to be key, and it's likely to be support. I would, between, uh, to keep it between us, I would love to see this thing correct down into the 2200s. I'd like to see a cleanse take place, a colonic, if you wish, of the markets to bring participation back in, pick up volatility, and create some opportunity for us to trade some rotations, some wider rotations. Currently, the rotations in the ES of my frac chart, the rotations, the harmonic rotation in the ES is still compressed, 2.25 on the upside, 1.75 to the downside. Very tight. The rotations on the downside are relatively non-existent relative to where they used to be. Under normal market conditions, normal goes back to about 2 to 2.5 years ago. These numbers would generally be the same. Generally, the negative rotations would be higher, would have a higher high to low value magnitude, and you can see that this is reversed. We tend to have higher upward rotations rather than downward rotations. The tight dashed line here is the first standard deviation, or 68.3% of the data set, which is what we would consider normal. The long dashes here are the 90% mark of the rotations, and I use that for other things. But right now, what this is saying is the harmonic rotation up for the last 20 sessions on a day session only in the ES on a 1 minute time frame is 2.25 points. That's really tight. It's really tight. And so you probably see that and feel that in your own trading, that we're not getting the kinds of opportunities we would like to see. So this is how this is playing out. So with that, I'm doing a webinar on the 10th of October at 4:30 Eastern about switching products and the type of work, the prep that you might want to do once you do. I'm looking at the Russell, the RTY a lot on the CME, and that's where I'm focusing a lot of my attention. I'm going to use that as the product to look at for that webinar. So we'll look at how we choose a product and go from there and do the statistics, the raw statistics to try to formulate an edge. That's on October 10th, hosted by Futures IO. Today, the expectation is open auction. Again, we're in new all-time high territory, open auction. I'm looking for it to rotate down base, and I'm looking for a strong rotation up, hard rotation up into new territory, and then for it to consolidate and finish higher into the 25-22 measured move high, that line you see there on the close. I cannot draw very well today for some reason. My mouse is like really not as sensitive. It's a laser mouse, not sure what the deal is. So that's the expectation. I'm looking for a shallow pullback down into the prior day's range. I'm looking for it to finish and rebalance inventory. As I said, the overnight inventory is all positive. I'm looking for a shallow pullback down, and I'm looking for it to start pushing higher, as we often do on new highs. Now we're opening almost just inside of Friday's range, so I'm not expecting a strong trend up or anything. We're looking for about 6 to 7 points of range on a Monday morning here today. So this is don't expect too much here. Okay, so we're looking for a low of around 25.15. If it even gets to the VPOC, to a high of about 25.22. That's 7 points. That's it. Now, if we open and push up, consolidate, put in a failed attempt at the high, lower high, push through the OS. Then we're looking for 25.15 on the first test, consolidate and push down into the prior day's IB. The key support here will be 25.0950 and then bounce back up into the close. That's hypo 2, more opportunity, more range. This is more likely to give us about 9 points or so, 9 to 10 points of range. But failure to push higher it will likely squeeze the volume that went off right up here that we see here in this volume profile. It's likely to squeeze that volume down, and the support area will likely be the 2509 area, the top of the prior composite, the top of Wednesday's trading, the LVN from Friday, and the IB high of Friday. That's what I'm looking at for today. Anyway, my time is up. I'm way over time here. Good luck today, and I'll catch you tomorrow morning. Take care.